welcome everyone. Welcome on this Friday. I'm currently in the UK and sun is out, which is very rare. Um, but yeah, it's good to have everyone here. We're just waiting on Lender. Nataji from Lender, the CEO, he's going to join us in short order, I assume. But yeah, otherwise all good on our end. Just some quick things about the environment and the kind of the market that we're going through. It's good to thanks, Kate. Kate's messaging me telling me that I'm an idiot. No, I'm just kidding. But yeah, guys, we've kind of gone through a bit of an interesting last few weeks. We've had some interesting things go on in the markets, like a little bit of up and down, left and right. Nothing really is for certain yet. We've had a bit of a downturn on the Bitcoin price, a little bit of a downturn on Ethereum. And like Alex and I spoke about it last time, we're kind of just waiting for some type of confirmation. I don't think we have anything yet in terms of what the market wants to see. And normally, what happens is we get to the stage of the market or the year where people are starting to come back to life. People are coming back from their summer vacations or having late summer vacations coming back, and Q4 is normally where we see a little bit of fireworks. So let's hope that that's the case. I remember about 2 years ago, I went to my first Token 2049 in Singapore, and I went there, got to Singapore at about 5 in the morning, and ended up going to the hotel and going straight to the event. Um, and I just remember being so surprised with how many people were there. Just talking about this because obviously Token 2049 is happening this coming week. A lot of the startups that we're raising for are going to Token 2049, which is great. It's probably one of the biggest conferences in the world. Probably more than 10,000 people, like 1,000 projects. It's just unbelievable seeing all these people in one area. I was busy talking to Jeff and to another one of the startups that we were speaking to about the amount of side events that are happening at these different conferences. And normally that's where all the business happens, in these side events. Like going to the conferences are great and listening to the speakers and the panels, you get a little bit of alpha, but majority of the work and the business, especially from a biz dev side and investment side, happens at these side events. And what's really nice about Token 2049 in Singapore is they have a number of events over the week that are good to watch. They have the karate championships, karate combat. They have the Formula One. They have a bunch of other things that people are not only going to a crypto conference for, but also going to like just enjoy general life, sports and entertainment and everything like that. So yeah, I think that when I was there, it was the One Championship, which is similar to like the UFC, but obviously it's held in Singapore. And it was a really, really good event. But yeah, looking forward to seeing what comes out of that conference. Hopefully, there'll be the last 2 years we've had a a Token 2049 conference. The Bitcoin price has dropped, so maybe we'll get a bit of an opposite this year. We'll see what happens. But yeah,
Jesus, Lee, just tell me whether we're going to be poor or not. Why are you talking about side events? I want to know if my family can eat. When are coins going up? Stop bullshitting the people here. Jesus.
Alex, it says listener on yours, so I didn't even know you were able to speak. But I'm glad that it's not
I'm
just me on
always
the
able to speak. I'm always able to speak. I'm everywhere at the same time.
What are you, Neo? Jeepers! Oh my gosh.
Damn
But
right.
yeah, I don't know. I don't know, man. Like, I think we've got some good stuff coming up in the next few months. I know AngelBlock does, which is a great thing. I think everyone who's listening in is pretty much a hardcore AngelBlock fan. Long term holder, all that jazz. I think we really appreciate those type of holders because they know the struggles that the whole market is going through. They're looking for long term value, and I can definitely say that what we're trying to do at AngelBlock in the next couple of months is going to be kind of mind blowing. I don't think people realize what lens we're trying to go to kind of change the DeFi game. And I'm sure Alex will kind of wring my neck for even just like hinting at it, but I think people should get excited. I think we'll come out with some information in the next few weeks that I think people will get really excited about.
Look, I think it comes down to this. I'm not rigging any necks, but I think it comes down to this, if I may say. Um, I actually talked with a friend yesterday, and the way I approach, like I've seen a few of these cycles, and when it comes to startups, obviously, if we're looking at news from last week, we saw friend.tech, which was looked like a potential top 30 protocol, closed their doors. Founders made some money, but a lot of people lost money because they were farming the airdrop, and they gave away, like, I would call this a soft rug, where you essentially give away, you announce the contracts for, like, the community is taking over, right? Like we saw this with NFTs.
Yes,
Like,
and meme
we're
coins as
giving
well.
this project away to community. We're giving it away to the community, right? Which is just a giant fu. They're not working on it anymore. The money they made is theirs. The money that was lost is never going to be remade. But what I'm getting at, right? Because I was very very early, over a year ago, in the Telegram bot game, right? And I was able to be one of the first holders of Unibot. I thought the branding was excellent. I thought the value accrual was excellent. And that team, again, there was a split in the team, and Unibot is like, it's nothing. It was the number one holder in the Telegram bot game, and now it's dead in the water, right? And it's probably never ever 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 coming back. And my point is this: I was talking to a friend, and your first job in a bear market is to survive. And it doesn't matter whether you are a smart contract dev who sometimes buys crypto, whether you're a protocol, you're a DAO, you're a centralized exchange, you're a trader, you're a speculator, you're an investor. Is don't die during the bear market, meaning you need to stay liquid, right? And step two is surviving bear market and do some cool shit since you're still alive, right? So basically, what I'm getting at is, over the last 6 months, we've been putting in a lot of work, not just surviving, but putting in a ton of work. Some of you on this call know what I'm talking about. But in order for this to really hit the ground running when the markets shift, right? Like, I think that one of the worst things that you can do, and hats off to, I know there's Jerry's here, who's part of the A0 ecosystem as well. Hey, Jerry. But what I'm getting at is, A0, Alf Zero has the same approach, right? And I really like that team for it, which is, you need to make your own luck in this space. If your business strategy is survive bear market, which is a good step one, if there's other steps, but you have to make your own luck in this space. You can't just wait. Oh, we need to wait till the markets shift. It's like, yeah, the shifting markets can help you, but they're not going to make a bad project good. They're not going to, people aren't going to forget about your $560 million FDV at launch, pre-product, or what have you, right? So I need to start these roundtables with a rant, because I think I don't talk with you people enough, and I always need to start with a rant, just to get Leith's blood boiling as well. I need to do something to piss off Leith to get him going too.
No, it's all good. I know you 100% right. I think that was our main approach when it came to the bear market. Like making sure we had good access to capital, but also ensuring we kind of made it to the next phase of the market. When I say next phase of the market, doesn't necessarily mean Bitcoin going up or Ethereum going up. It means that there's more participation, there's more interaction, there's more adoption, all that sort of thing. I don't think that's happened on a wide scale yet. So yeah, I mean, it's interesting to see how the market kind of shifts in different formats and different ways. And in some ways cycles are similar, in some ways cycles are vastly different. And that's the thing that you get to learn on all these new cycles. But what I will say is, it's great to have Linda join us. So there were some technical difficulties with spaces, as there always is. But the CEO, Nataji, has joined us. Nataji from the States, and currently traveling around the world, I imagine. Linda's also going to be on a bunch of different conferences. So, Nataji, do you want to come in and introduce yourself? And yeah, we'll get on this roundtable and chat some stuff.
Absolutely. Yeah. And thank you for the introduction. So, hello, everybody. My name is Naltaji Metivier. I'm the CEO, founder, and lead developer of Lender. I had a couple technical difficulties joining, and so I apologize about that. But luckily, we were able to resolve them in time and come here. I actually wanted to comment really briefly on what you guys were discussing a minute ago, which is the idea that an okay business strategy is to aim to survive the bear market, just get through it. I think that's sort of the bare minimum of what you want to do. But yeah, you really want to find a strategy that can thrive even under these conditions. And I've seen situations where people have developed business practices or really business models that succeed extremely well in a bull market, but then flop completely in a bear market. And so I wanted to talk about one of the other benefits of figuring out a way to thrive in a bear market. And that is that when you're able to have a business model that thrives in a bear market, it'll also succeed particularly well in a bull market, like even more than many other businesses. So finding something that works in a bear market bodes like extremely well for when things eventually do turn around, right? Because bull markets and bear markets, they never last forever. Eventually it's going to change. And so I think that, yeah, the right idea is to aim for something that not just survives, but really thrives and can do a full launch and grow as a product, even under the conditions that the market is trading sideways or even down.
Yeah, I think you mentioned a lot of good points, and it kind of leads me back to some of my days in investment banking. Like when I was in investment banking, the banks kind of go after a zero sum based risk strategy. They always are long and short a specific trade, and basically have the volatility indexes earn them profits, right?
Yep.
So no matter what, they are going to be relevant in any specific market. And a lot of the times the banks make more money in a downturn
Yes.
in the market because people panic a lot more. People panic when prices go down, which increases volatility, which inherently creates more fees. And that's essentially how it works. And I think we can kind of lead into lender a little bit, because that's essentially what you guys are creating. You guys are creating an infrastructure or indices that cover large bases of different markets. I think, why don't you go into a little bit about lender and how the idea came about, and what do you kind of see the vision for it?
Yeah, absolutely.
Can I jump in real
Sure.
quick before
Yep.
Nanaji continues? Because Nataji, I really liked your point, and I mean, I'm not saying I like your point just because we have a similar approach. If you had a different one, I'd love to debate it. But I do agree with you, and there's one thing I think of value that I can add here is I think I even mentioned this at one of the panels in Barcelona last year, I think it was last year. Time in crypto is a flat circle. It doesn't really matter what year it was. It was recent. But what I'm getting at is, I was in this investment panel, and we were kind of talking about, growing communities and reaching product market fit, bear market versus bull market. And when the euphoria is high, it seems like everybody's reaching product market fit. Sometimes it's not even the protocol itself. Sometimes it's, oh my God, we achieved PMF because we have a tradable valuation on our token that's 200 million, right? And we all know that that's kind of ludicrous. Like, that doesn't really show anything. And one thing that I always say is, if you're able to achieve something that even resembles product market fit in a bear market, like, you are going to do well. I think AngelBlock and Lender on this call, I think we're part of that group. I know Delta Prime, who I just talked to, they raised almost 150K with us over the summer.
Mhm.
That was one of my bigger investments personally from 2 years ago. Like, they were able at launch, when they launched their beta of their protocol, they were able to achieve $19 million TVL. And that was, I think, a year and a half ago, right? So deep, deep bear. So if you're able at launch to achieve 19 million TVL, it's something around 70 right now. You know, what more can you ask for? Like, if you can achieve product market fit in a bear market, that's just incredible. Like, I'm really looking forward to see where they're going to go with this. I think they have all the right tools in order to succeed. So even if your user base is literally 10, 20, 50, 100, 200 people, like, you can scale that. The problem is, and something that I'm seeing is, so many startups, they're trying, and there's a few that I talked to recently who have been delaying their TGE by like 20 months, right?
Well,
And my question is, like, do you have anything, like, is there anything under the hood, or is this really a project that will live and die with whatever the market tide is,
yep.
right? Because that's when things start getting a little bit sketchy in my book.
I agree. Yeah, I think that if you're delaying that for that long, then a problem sort of exists in that you're sort of signaling that you don't believe that your product can function in a bear market. And I think a bear market is a real test of product market fit. It's like, do people really need your product? Not just want it, but need it, to the point that even when the market is down, they still purchase or they still use your product. So that's a very good point. I'm glad we're speaking about it because it's good to sort of have this perspective on the market and not use it as an excuse for like, hey, this market is why we're not launching or not successful or something like that, which is such an easy cop out, I think personally, that people take. But yeah,
Definitely.
happy to speak a little bit about Lender, a little bit about
100%.
my
I
own
agree.
background as well. And yeah, share with you what we're doing, really what our big vision is for the future of crypto, not just of our company. And so I'll start with a little bit about myself. As I said, my name is Nathaji Metivier. My background is predominantly technical. I worked in cybersecurity for around half a decade. That's what I got my degree in as well. But I've been involved in crypto for much, much longer than that. I actually started Bitcoin mining back in 2011. I have old screenshots of me posting on the Bitcoin Talk forum asking for help because I couldn't get the miners working. I was only like 16 or 17 at the time. And I was like, this isn't working. What's going on? And so that's how I got started in crypto. And I mined all throughout college. It helped me pay for college. And yeah, so that was all my journey. But I didn't make it my career until around 4 years ago, where I decided to start working in this space full time. And I actually started a company called UltraCoin, which was, honestly very similar to what we're talking about. It was a project that I thought had product market fit because there was a bull run going on. But then when the bear market came around, I realized that our target audience wasn't one that produced a huge amount of revenue for themselves in a bear market. And that put us in a difficult spot to where, for that reason and various other reasons, we decided to ultimately close that project. But we took everything we learned from that project and we put it into Lender. And I really think that I'm a lot better off as a result of it. And that sort of brings us to, how did Lender learn? Like, how did we get here? Well, with my previous company, even though we had this sort of moderate product market fit, we had a lot of assets on chain to manage. We reached double digits in millions of TVL. And what we discovered is that if you want to protect the assets that you're holding on chain, it's not exactly an easy thing to do in Web3 because Web3 is inherently incredibly volatile, right? Everything is correlated with Bitcoin, and Bitcoin is not exactly a stable asset. And as a result, there are these huge market swings where companies lose millions of dollars in a day, right? Even in a few minutes. And so we were really looking for options in order to diversify our portfolio on chain and protect our assets, right? And what we found is there was just no options for that. Like, it just didn't exist. You really had to, in some way or another, take your assets off chain in order to diversify, whether that's doing it yourself or having other people do it for you. And that was a rather grueling process. It could take up to 14 days between like all the token transfers and moving to bank accounts, moving to brokerage accounts, just to access something like an ETF or, a REIT or stock or something of that nature. And so when Lender closed, ultimately, I was looking for a new idea to tackle. And really discovered that that was a problem that a lot of people face. A lot of companies face that. And then not just Web3 companies, but individuals. There's 3.4 billion adults around the world that don't have access to the top asset classes. So we realized, okay, this is a pretty big problem to solve, right? There's a lot of people that need this. And the second thing that we realized when we were looking into the available solutions is that nobody was using a decentralized approach to solving this problem, right? A lot of people were going sort of the Tether and Circle route of having a centralized company that produces a token. In their case, is a stable coin. In this case, it would be like an RWA asset of some sort. And they're going after the centralized approach. But the decentralized market was not catered to. And I think the decentralized market actually is better suited to solve this problem because many people around the world, they may not be able to, have US citizenship and be able to KYC with your company in order to access your RWA asset. So this is a problem we're aiming to solve, is getting these asset classes on chain for anybody and really everyone in the world to use. And so what we decided to do was we built Lender. And Lender is a fully decentralized real world asset token protocol that can produce tokens for any asset class and make them globally accessible. So that's really the short and sweet of what Lender is. It's not too short, actually. But yeah, if you have any questions, I'm happy to answer. I think one other thing I would like to touch on is that there are sort of two phases to the Lender project. There's sort of this centralized phase, which is what we're in now, where our company is driving the product forward. And we're building out this product predominantly for Web3 companies to be able to diversify on chain, right? Helping them diversify their portfolios. And there's currently around $30 billion on chain that are not diversified in Web3 portfolios. So we're helping people diversify. But the second phase of the project is when we aim to fully decentralize and have this protocol be operated by a DAO. And the goal of that DAO is really going to be to give everybody in the world equal access to every financial opportunity. And in doing so, give anybody in the world the capability and the ability to take their financial state of their life into their own hands and build prosperity for themselves. So that's really the long-term vision for Lender. It's a little bit more altruistic. But yeah, I wanted to discuss that briefly as well.
Yeah, that's great. And I think what's interesting is like you say, I mean, $30 billion on chain is not diversified or in any specific thing, you know. Sometimes, especially once you have enough money, like being diversified into different various risk stocks or risk indices may not be the best approach to like kind of control capital. You know, I think I read a stat about Tether. There's been a lot of posts about Tether earning $6 billion last year, just basically owning treasury bonds, you know, and this comes down to obviously the rates being quite high in terms of what they were about 4 years ago. And it's almost like you have to be very dynamic with the market, you know, like, so if the market's giving you risk-free rate of excessive amounts, obviously you're going to put your money into something that's risk-free, you know, that just is a no-brainer. But a lot of the times, especially during different growth phases of markets, especially when countries are building up their GDP, and it kind of makes sense to kind of diversify and to go into different aspects. You know, like a lot of times the commodity market is very underutilized when it comes to this type of thing. You know, so it's, I don't, like you say, there's not really a space, especially within the Web3 environment, that allows this to happen. And I think there's a big push for real world assets kind of protocols coming up, and there is a lot of obviously competitors and competition around it. And what do you think is going to be the next phase in terms of real world assets, and how it's going to basically benefit the whole ecosystem?
Yes, yeah, excellent question. So the first thing I'll touch on is, like you were saying, everybody is in treasuries right now, which makes sense. It's a smart business move at the moment. It's basically risk-free. But that level of yield that treasuries are producing will not last forever. And just like we were mentioning earlier, bear markets and bull markets, neither of them last forever. This sort of environment where interest rates are so high is one that also will not last. But for now, it is. And so what I think will happen is there will be a large-scale shift as yields lower with US treasuries out of that asset class and then into other asset classes. So that'll be into crypto as a whole. But as there are other RWAs coming on chain, we're going to see growth in all those areas for non-treasury based RWAs, which is really the market that we are targeting specifically. And on that note, I'll talk about two things. The first is sort of why it's important to have some of these asset classes here. And the second thing I want to touch on is maybe a differentiator for what sets Lender apart from a lot of the other options that are available to sort of solve this problem. So for the first one, I'll mention a quote from Ray Dalio. So Ray Dalio is the founder of Bridgewater, I believe it is, and that is the world's largest hedge fund, or at least they were at some point. I think they still are. And Ray Dalio basically has said that diversification is the holy grail of investing. And the reason why is because if you can diversify into enough uncorrelated asset classes, you can maintain a majority of your returns while reducing your market risk by 80%, right? And so who doesn't want to maintain their returns, these risk-free returns, essentially, while reducing their risk to essentially be close to risk-free? So that's why these companies need to diversify so that they can maintain these returns and then not maintain the returns that they're getting and not take additional risks. And so that's why they need to diversify. And then the next thing I want to mention is that there are a number of companies that are offering these RWAs, right? So there's going to be this big shift over time from treasuries into all these other asset classes. And the big question is, why would people choose Lender, right? What sets Lender apart? Why are they going to go after that rather than something like a Centrifuge or Ondo or some other option that's going to be available in the future? And the way that we're aiming to set ourselves apart is that Lender really wants to not only offer every single asset class, but we also want to offer the highest yield out of anybody in Web 2 or Web 3. And there is a very specific way that we accomplish that that ties into being fully decentralized, right? So we take these RWA tokens and we combine them with two elements that bring us to a much higher level of yield than what you would see with these other options. And those two elements are liquid staking and 100% profit sharing, right? So because we're a fully decentralized protocol, all of the profits, 100% of the revenues that the protocol produces are sent back to stakers of our governance token, right? And in this way, we're able to essentially just hand a lot of the yield back to the users. So if you look at something like Tether, right, you were just saying that they produced $6 billion, I believe. I think it was $6.3 billion last year in revenue. Well, in our case, we just hand all of that revenue back to the users, right? And our protocol, our company makes money because we are also a user of the protocol, right? So we stake alongside everybody else. And basically, we don't make any money if the users don't make any money, right? So we're very much incentivized to make it successful for everybody. So that's the first thing, right? And in that way, we can boost the yield overall. Leith, I saw you you unmuted there for a second. Did you want to say something?
No, I was just gonna say it's similar to I was when I was studying to become a chartered accountant. One of the ways in which companies incentivize their employees, which essentially is a similar model to what you're talking about with regards to users and obviously the project, was that they would offer like share incentives or something like that, so that if the company made money, then the employees made money. Like it makes a nice congruent kind of centralized goal, and I kind of really like that approach.
Yes, yeah. I think it's all about aligning incentives, right, with everybody, right? So we align the incentives of our community with our company and our company with our community, right? And so everybody is incentivized to make it successful and nobody is benefiting from, taking profits from everybody else. And we do this all at the smart contract level, right? Because we're fully decentralized, everything's operated by smart contracts and controlled in that way. So in this way, we're sort of beholden to ensure that everybody benefits or nobody benefits, right? Which I think is really good. So that's the first way. We take all of the profits that any other company would be making, we just hand it back to the community. And this is all possible because everything's operated by smart contracts, right? We don't need employees to be managing your positions and all this other stuff. Smart contracts do it all. So we don't need to take a huge cut like as a middleman or something of that nature. So that's the first thing. And the second thing is liquid staking, right? So the concept of liquid staking is something that's not only applied to RWAs, or we haven't seen it applied to RWAs. It's usually applied to something like Ethereum, right? So people are staking in a proof of stake protocol, and they essentially earn returns through that. And so we looked at that concept and we saw that people are essentially generating a large amount of additional revenue on top of the base revenue by having a liquid token they can continue to use in other areas within DeFi, right? And we said, why couldn't you apply that to RWAs? Why couldn't you apply that to any other area of Web3, anywhere where a token is being used? And so when users use our RWA tokens, they're able to stake them in our protocol to earn that protocol revenue that I mentioned earlier. And then from there, we give them a liquid stake token that represents their stake. And they can take that token and use it anywhere in DeFi, right? So you could make LP tokens, you could lend it out on a lending protocol, you can use it as collateral. Anywhere you want to earn additional yield, you can do that. So you can look at all the places where, let's say, stablecoins are used. And just imagine that instead of using stablecoins where you're losing money to inflation every year, you could switch that out for a US real estate token. And in that way, that's the second way that we produce higher yield than anybody else. And I think at the end of the day, we're all purchasing these tokens and putting our money into these things in order to generate some level of returns in the long run. And so I think at the end of the day, yield is king, right? Returns are king, and people will go to where it's located safely, of course.
100%. I think another thing is that people don't realize the power of passive income. I think that's something that if you can make money while you're sleeping, that's when you've kind of got to the stage where you can kind of free up your time a little bit. But I want to touch on something that you spoke about, like if someone doesn't know Ray Dalio, yeah, you should read his books and have a bit of
Definitely.
an oversight of what this guy did. Basically, I've got a story that I heard that he basically sent up a satellite to verify how much oil was in the oil reserves, and then placed his bets on how much oil or whatever side of the oil trade it was. Like whether it was short or long, or if they were suppressing the supply or increasing supply, and that's how he would get his information by sending up satellites. So he's playing on a whole different level. I think it'll
Seriously.
be yeah, it'll be super interesting to see the next phase of kind of innovation within crypto on the same level, you know. But anyways, well, I want to get to real world assets as well, because I find it quite a fascinating subject. Because when I was in investment banking, we did a lot of derivative trades, we did a lot of exotic kind of structured products, you know, and it's very interesting to see how it operates on the traditional finance side. But it's nice to see it kind of coming into the fold in crypto. Do you think that having a real world asset project and having these other projects within the real world asset space is going to make everyone understand macro a lot more, because you kind of have to be and have understanding toward macro in order to place your bets correctly and have good diversification and things like that?
Leaf, just really quickly, as someone who goes on crypto Twitter, I can assure you that everyone is a macro expert, okay?
100% of people in Web3.
120%, my friend.
Bro, did you know that CPR was the other day? I mean, if you don't know CPRs the other day, I don't know what you're doing in crypto.
Exactly. So interesting. It cut out there for a second. Could you repeat the question that you asked at the end though?
Well, I was just saying that, do you think like having this kind of this part of the industry go live and have a lot of kind of access to the users is going to make people need to understand macro a lot more?
I think that it will. Yeah, I think it's going to be a big shift for Web3 uh, in terms of what it sort of represents, right? So right now, Web3 is this sort of high risk, highly volatile environment for trading. And so even a lot of very legitimate technologies get sort of looked over because people are like, oh, it's like gambling is what they look at it as. I think that it'll be interesting to see when we have these more reliable asset classes here, how that shifts, right? Like if I can go on Aave and lend out tokens related to different types of very stable commodities, then will people's opinion about Web3 change? And then, yeah, a lot of Web3 native people that don't pay attention to sort of larger macroeconomics outside of Web3, I think that they're going to begin to need to educate themselves in those areas. And I think that people actually underestimate how much asset value there is to bring on chain. So at the moment, I think all of Web3 is around $2 trillion of value on chain. Um, many banks now, so Bank of America, Boston Consulting Group, Northern Trust, they're all predicting that by 2030, in terms of RWAs, there's going to be up to $16 trillion of assets brought on chain, right? So crypto will grow alongside that. But I wouldn't be surprised if we end up in a situation where crypto is sort of 50% of the market, and then 50% of the market are all these other assets that came from outside. And so I think that it'll be a very interesting position where people will sort of have to pay attention. I think it's going to change everything. Yeah.
Alex, do you want to chime in a little?
I'm listening. I'm formulating my thoughts.
Okay, well, you talk.
You know,
You talk when you're ready.
I definitely agree.
Yeah.
I agree, but I'm trying to find a way not to agree, because when people don't agree, it's much more interesting.
That's true. That's true. Yeah, let's see. Like a counter argument against that could be that they remain very separated. Like for some reason, the bringing of all these new assets on chain, like Web3 still remains the same and it still remains somewhat differentiated. It's possible. It's totally possible.
I think the biggest kind of blocker.
I think a
Okay.
counter argument is. Oh, Leaf, you want to go ahead?
No, I was just gonna say the biggest blockers were the banks. You know, I think
Sure.
people underestimate like how hard it is for banks to change technology. You know, like it's I remember pitching some type of technology within the one industry I was working in, and they said, oh, we developed some technology about this 2 years ago, and we'll only change it once we get a positive NPV on the asset purchase. You know, so that, like, a lot. That's why people complain about banks, because a lot of the technology that they control is archaic, you know, and they're always behind. And that's why fintech has kind of jumped in and had a bit of a go at that market, you know. But I think we're seeing now that BlackRock's already got to the point now where they are looking at it and doing stuff in DeFi and decentralization. So that is the first step, I believe, and that's probably why people view that as possible. You know, I mean, 16 trillion on chain is definitely possible. You know.
The only thing I'll say about this is, and I'll I'll preface it by saying that I've actually been seeing my stables because I really want to take part in the lender raise. And I'm not trying to BS you because we're, public facing at this moment. It's true, because I just really like what you guys are doing, and I'm super like underexposed when it comes to RWAs right now, and it's the whole market's been talking about it being one of the main narratives going into this bull. So I think some exposure there is just the rational thing to do as well. But a counterpoint would be, and this is nothing against RWAs or nothing, but I am having this very tiny amount of PTSD because a part of me kind of feels like a lot of RWA hype is a lot like you guys. I don't think you were in the space when it happened, but after we had the ICO boom, uh, so ICO boom tops in, let's say, what was like Q4 2017, but I know for a fact that they were still the first quarter of 2018, there were still like a few tens of millions of dollar raises that occurred. I remember Academy announcing their $52.5 million raise like midpoint of March 2018. But what I'm getting at is when ICOs fizzled out, everyone and their grandmother was saying, "Oh, ICOs, they were unregulated, and that's the reason like this was not a way forward." But security token offerings, STOs, those are going to be the big things. And has anyone like participated in an STO or seen an STO, or like I know that like 3 companies have done them and they were all like real estate, right? So like that's the only thing, the only negative thing I can say just to have some kind of counterpoint is I do feel like a lot of that hype has been like rebranded. I'm not saying it's a bad thing because the market, as Leaf and Natalia, as you both said, the market's different. Like if I just think about the regulatory landscape, and don't worry, guys, I'm not going to go into the like regulatory BS because that would make this call really boring. But it's a different world. Like you have ETFs, you have banks working up. I remember getting working to get bank accounts for different fiat currencies when I was with this exchange, and it was an uphill battle, and now like I get emails of people offering this to me, like to AngelBlock, and we don't even need it, right? So it's the last 6 years have seriously changed this landscape. And I think back when STOs were a thing, it was all hype, it was all BS, and only now is the market ready for this kind of conversion that Nathaji was talking about earlier.
Yeah, I completely agree. I think that as someone who's been here in crypto for a very, very long time, I think that there is a huge difference now when you see, trillion-dollar asset funds like BlackRock coming in and entering this space and all these ETFs being created, that it simply is voting for a different time period that's beginning within Web3, which is like this is the beginning of the fusion between traditional finance and DeFi. And so that's why we're seeing all these predictions coming out of these major banks like Bank of America and Citigroup and all these other ones, right? Like, why would they even be paying attention if they weren't themselves considering taking some level of action within this space? Lastly, I think that on the regulatory front, I also will not get into the weeds with it, but in many places around the world, we're now seeing greater regulatory clarity on how protocols can move forward with security-like offerings, right, of various kinds. There still needs to be a lot of development surrounding fully decentralized protocols, and that is taking place. But I think that right now people have many more options as far as ensuring that they are compliant, right? And that's a really big goal for us, right? Lender is aiming to have global access. That requires compliance in a lot of different places. And while the regulation is underdeveloped in some places, we do our best to remain compliant. So as a company, our top priorities, our number one priority is security, always. As a decentralized protocol, I think having any kind of security flaw is immediately the touch of death. But right after that is compliance. We really want to move forward in a compliant way that gives us access to jurisdictions that no one else has access to. That's something that we're aiming for as well.
Yeah, that's yeah. I think a lot of companies have not taken that approach. You see a lot of the projects that are coming live today, and they almost like a go live first and get compliant later approach. And I think people are going to realize that that is definitely the wrong approach to take, and they're going to have either fines or they're going to get sued. And we're seeing it a lot now with some of the protocols that are having. Obviously, there's certain people that have vendettas against crypto, but we obviously want to get to a point where that doesn't become a staple in our industry. But yeah, we we've spoken a lot about different things throughout the call. Natalia, I wanted to just touch on Lender itself, because I know that Lender had her proof of concept project as well, and you guys are obviously moving into a different phase of the project and growing the ideas behind it. Do you want to talk about the various things that you learned on that scale, and what other things you're trying to implement with Lender itself that that you would have otherwise done with the proof of concept project?
Sure. Yeah. So we sort of had this earlier version of Lender called Lender V1 that we deployed. I look at it as something like a pilot for what we were aiming to build. We had this idea in our mind about how this could be done in a technical sense, in a way that we thought people would like it to work, which was pretty complex in our original iteration of it. And so we deployed this version of the protocol early on and gathered a small number of users. We gathered around, I think, 5,000 or so users just organically. And so this version of the protocol was relatively, as I said, relatively complex. It had a lot of complexities to it related to the number of tokens and the way the system actually worked. But it was largely successful. It generated revenue. People were using this real world asset token. It worked really well as a proof of concept. But most importantly, it allowed us really to interview real users who were spending money on this. And that gave us a huge amount of insight into what we should have been building or how we should change the protocol to make it significantly better. And so eventually we closed that pilot program, which was V1, and we basically compiled all of the feedback we had received and made it into a list of features that we wanted to implement into the protocol, which is what we've actively been working on. And so if you look at our documentation, which is just directly available through our website, at the very top, there's a section called Introducing Lender V2. And there's a section in there that just lists out all of the features that we're aiming to add. And some of those features are things like liquid staking, right? The first version of this protocol didn't have that. And other aspects as well, like changes to it to improve the returns for the users and improve the simplicity for the users. And so essentially we've been working on V2 and it should be on the testnet very soon. I don't like to give specific dates, but we're aiming for within the next month, maybe 2 months, but hopefully within the next 30 days. And so everybody will be able to try it. Yeah, it has a simplified interface, simplified technology, multi-collateral support, liquid staking, this 100% profit sharing with the users. This is all from the feedback that we got from our users at the start and have implemented into this protocol. And I think that because of that, that's really what's going to make us have the best RWA product on the market, period. And I think that if we never launched that product and never gained that feedback from the users, we would have just built something that was ultimately subpar instead of something that could be exactly what people want.
Yeah, for sure, for sure. I think getting proof of concept is something that's very underutilized in this industry. I think people really just want token to go up, and there's a lot of singular mindsets or like a singular approach when it comes to various projects that determine its success. You know, people don't realize that, like, when you have adoption, when you have users that use the product all the time, that can get you through those specific hard times in the market, you know, and that's what I think a good proof of concept does. You know, it teaches you, okay, what did we do right, what did we do wrong, what can we add, you know, what do our users want, and it gives you an idea of what you can kind of evolve into, you know. And I think what's also nice is it kind of resets your market. You know, you kind of get into a stage now where you're going to relaunch, which is great. You've had other investors. I know that we spoke a little bit about like Avalanche, and the grant you guys got, and you guys have had access to different investors as well that now see an overarching view of the project as it's evolved, you know. And you guys already have like I said, proof of concept, and now you can just kind of scale that from the level that you were to the level that you want to be.
Yes. Yeah. It would have been easy, honestly, because we were seeing a lot of organic growth with that first version of the protocol. It was totally possible to just push forward with it and build a bunch of integrations and just do a bunch of marketing and grow it. But ultimately, we knew this version of the protocol, the V1, was not going to see the level of success that we want this protocol to reach. Right. What I want for Lender is for it to at least be a top 200 protocol in all of Web3. And I felt like with that version of the project, it just didn't have the capabilities of reaching it. And I felt like with the feedback we were getting, if we built that product, we could get there. And so I think the right move was for us to ultimately close that pilot and integrate that feedback and then move forward with a better product. And then, yeah, once we did that, we really began seeing a lot of traction in terms of partnerships, right? So we're partnered with Avalanche, we're partnered with Chainlink, we're partnered with Brink, which is part of Animoca Brands. We're partnered with Benki, the largest lending protocol on Avalanche, and a variety of other protocols. And we just announced another partnership just, I think, yesterday. It's OneClick. It's a DeFi protocol as well. And we have many in the pipeline. And I ultimately think that being able to pitch to them a much more compelling product with these new features made it much easier for us to make those connections, right? They see the value in a globally accessible token that can represent any asset class that also produces the highest yield possible in Web 2 or Web 3, right? That's a very compelling narrative. And that came about not from our minds as a company or as the owners of this company, but really as a collaboration between us and our community.
For sure, you sure. And I mean, you see successful kind of relaunches all the time. I mean, look what happened with Lend and Aave. You know, like Aave did something similar. But I mean, they really leveraged a good part of the market and grew it to obviously one of the biggest protocols in the whole DeFi space. You know, and I think that's what's really cool about it. Like within technology, I mean, everybody knows, like even if it's iOS or anything like that, you're always going to have upgrades. You're always going to have a point in time where things are going to be better. You know, you can always add things to technology, which is quite cool. It's kind of like art, you know, it's never finished, or fashion is never finished. It's really like a lot of time when you stagnate, you really don't survive. You know, I think that like innovation is something that is a massive key to obviously staying relevant and making sure that your adoption continues in a specific way.
So I was
Um,
muted. Sorry about that. I was muted. I meant to agree with you. Yes, I think that, yeah, adoption is ever changing. I think especially within the space within Web3, it's such a rapid moving space. If you're a year behind it, everything has changed, right? If you're 2 years behind, you're totally outdated. And so you have to keep up. You really do. And I think that I look at our first version that we released, even though it wasn't live that long, as really being our V1, right? And we just very rapidly moved to V2. I don't look at it as being like sort of just a relaunch because it's a different product. It's a superior product. And V1 sort of, it didn't reach all of it of what it could have been because we closed it early, but it wasn't unsuccessful either. Ultimately, we were able to gather 5,000 users, generate over $100,000 in revenue through that protocol, launch a U.S. real estate token that had global access, and so it was good. It was a good stepping stone to what ultimately I think will be our leading production product, which is V2.
But it's also exactly how we started this conversation, right? It's the points that we discussed in the first few minutes when you were joining the roundtable is like you have to focus on product market fit, and even if V1, if you achieve product market fit with V1, with those stats that you just mentioned, in a less favorable market, right? Then like creating your own luck and not just waiting like, well, maybe if I just sit on my hands with V1, maybe in 2 years it's gonna maybe just maybe it's gonna achieve the skill that I wanted to, right? Like you created your own luck. You said, okay, we're taking this feedback, well, we're gonna implement it and we're gonna make something that is 5x better than what the pilot was, right? And I think that's I think in general that's just a very admirable approach because I've seen a lot of companies in this space die because of complacency, right? And it's so painful because it's exactly like you mentioned. You have a top tier project from 3 years ago, but they're unwilling to change. They're unwilling to adapt. You know, maybe they're 90% of their user base was Ethereum mainnet, but it's currently on Arbitrum, right? And they're like, no, like we're just going to serve mainnet or something like that. And just as fast as companies achieve success in this space, it's even faster just to die. I mean, like I started this conversation with Leaf talking about Unibot, right? It was they were the number one player in the Telegram trading space a year ago, a year and some change when they launched, and no one's using them now, you know, and they messed up the token. It's irreversible. The brand is destroyed, sadly, you know, and it sucks. Like if you don't listen to community, if you don't think that you can always improve on what you're doing, then this isn't the space for someone like that.
I agree. Yeah, there are so many projects that launch successfully and then don't do enough afterwards, or really just cater to their existing product without immediately thinking about how are we going to innovate on this and come up with the next version. I think that the most successful products like Uniswap, right? You see they come out with so many versions, they're constantly, even with the newest version coming out, I'm sure they're working on the next thing immediately. And it's just the way to stay at the top in this space is you have to constantly innovate. Even immutable protocols are constantly innovating and releasing new versions. So something very important. I think another mistake too is that people just try to get all of the money as fast as they can, right? Like they just launch a protocol and immediately have an idea without ever doing testing to see if there's product market fit. Sometimes maybe they're avoiding letting the public figure out if there's product market fit or not, right? By immediately deploying a protocol and a token at the same time. And so I think having this sort of test in place that demonstrates, hey, there were 5,000 people that were willing to spend their hard earned money on this, and we weren't even marketing to them. That sort of demonstrates that that there is some level of product market fit. And so that plus the feedback we've received and an improved product, I think in a way is hopefully de-risking this opportunity.
For sure, for sure. Nataj, you guys are going to Token 2049, right? And you're going to a bunch of other places. What are you hoping to get out of those type of things, and who you planning to, or what's your goal of those specific conferences?
Sure, yeah. At Token 2049, at all conferences, we sort of have like a multifaceted approach to how we deal with it. At a lot of conferences, I usually go for speaking opportunities, right? So that's what I did at ETHCC, and that's what I did at Consensus. But I think that for Token 2049, we're going for a slightly different approach where I'm aiming to do a lot of one-on-one meetings and meet with people directly, meet with companies directly in order to pitch our product directly to them as them being potential customers or users, but also to speak with larger scale investors about maybe participating in private rounds ahead of our IDO later this year. Mhm. So those are our focuses. And then, of course, it's always good to go to conferences to keep our ears to the ground, so to speak, and kind of see what's out there, right? So part of innovating is being aware of what the competition is doing and aware of what your customers are building. And so that's a lot of what we're doing there. And if anybody here is going to be at Token 2049, I would be happy to meet them. We'll have some time at a booth at the Chainlink booth, I think on the 18th. And so if anybody's there, I think between 2 and 4 p.m., me and some other members of my team will be there, and we're happy to speak with you guys.
That's awesome. That's awesome. Another thing I wanted to get into just before we close, because we're gonna probably wrap it up in the next 5 minutes. But within like an RWA project, obviously the kind of key behind it is obviously getting liquidity in the different LPs within the different asset classes, right? How has that process been to this point, and how do you expect it to go? Obviously, once people get more vision of the project and and see the benefits that it could potentially have.
You were asking specifically about acquiring LP as time goes on.
Well, yeah. Well, obviously, with the different indexes, the different asset classes, like that, I imagine that you would need different liquidity for those specific indexes.
Yes, yeah. So essentially, technically, we have the capabilities of launching a number of asset classes immediately. But really, the limiting factor is that there needs to be sufficient liquidity that people can trade these safely and know that they can, safely enter and exit these asset classes whenever they want, right? So we wanted to have a very intelligent approach rather than deploying 10 different assets right off the bat. We're just going to start with one, which is U.S. real estate. One of the best real estate markets in the world, and an asset class that a lot of people want access to but can't easily access. And providing that to people in the form of a token, I think is the best way to go. And by starting with just one asset class, we can go multi-chain and we can sort of safely establish liquidity and revenue, and then eventually expand to other asset classes one by one as we have sufficient liquidity to safely do so. And there are ways that we can accelerate this too, right? By fundraising, we can essentially acquire liquidity to go to multiple chains or multiple assets faster. Or through the community providing liquidity, we're able to grow more quickly. And then last but not least, market making partners oftentimes can provide early liquidity for projects. And so we're tackling this on all these fronts in order to be able to quickly and rapidly expand into a number of asset classes.
Yeah, awesome, awesome. Yeah, I think what we can do is we can just do some high level stuff. Where can they go? Where can the community find you? What chain are you guys going to be launching the token on? Obviously, you guys are going to be multi chain, which is great. what your website is, all that sort of thing? Do you want to just do something like that, and then we'll wrap up the call?
Yeah, absolutely. Yeah, so everything is available at lender.fi. You can find all of our social media. You can access that directly here through Twitter or X, right? Oh, sorry about that. There's an alarm. And yeah, so all of our information should be available through there. And we're readily available to answer any questions that you have through our Telegram, which is where we really connect with our community. Outside of that, I think that, yeah, you can find a lot of our information on AngelBlock as well. And as time goes on, we'll add more there too.
Yeah, and there'll be an announcement coming up when the lender raises. We're looking forward to that. We've been in talks for quite a while, which is great. Obviously, we got to know the team. So yeah, looking forward to that raise as well. I think it's going to be early October, which is where we got it planned, and looking forward to it.
Of course, yeah, I have no doubt that it'll be successful. You know, we've been, as you said, in contact for quite a while. We've monitored a lot of the races that have taken place there. We've seen other projects that have a similar level of seriousness successfully raise quite a bit of money there. So I don't think we'll have any issues. And we're really looking forward to that sale. I don't know if we've announced the date, so I won't say anything, but it'll be coming soon. And yeah, so thank you so much for your time. And I would love to do this again sometime.
Yeah, it's been great. Thank you so much. And Alex can close it off for us.
We'll hold you to it.
Definitely. Yeah, feel free.
Take it home, Leaf.
I was saying you should take it home, but I can take it home. Yeah, no, I've been.
Bring it home.
You know what? I've actually been waiting for this roundtable for a while. Like Natalia and I first started speaking probably I think around June. And we were getting to a phase where like him and I were just chatting generally, like not even about AngelBlock or Lend or anything. And I really did think that his insight would be appreciated by our community as well. So I've really enjoyed this talk. Obviously, having Alex here, you know, he's the one that drops the alpha sometimes, you know, majority of the time. So it's always good to have Alex on. And so thanks to everyone for listening. Thanks to Nataji, and all the best at Token 2049. Hopefully it goes well.
Thank you
And
so much.
yeah, make sure that you guys share this and get the word out there about Lender. And looking forward to seeing you guys soon.
Yeah, thank you guys so much. You guys are great hosts. And like I said, I would love to do this again sometime. And if you guys have any questions, our team is available in the chat to answer them. And we'll speak again soon. Yeah, and hopefully I'll see some of you guys at Token 2049.
Perfect. Cool, guys. Have a good weekend. We'll chat to you soon.
Have a great one. Bye.
Cheerio.